Hello and good morning. Welcome back to Moneycontrol live stream. You're watching the opening bell and I'm your host Santosh Nair. Well, Indian shares are set to open higher on Friday, and probably this could be the third consecutive week of gains. This is mainly because of rising hopes that the US Federal Reserve may cut interest rates. Clearly, all the macro data in US pointing that rate cut in the US could come in earlier than what the market is expecting. But a bigger boost for the market has been the sharp drop in crude oil prices. Brent has fallen to about $77 per barrel. Now, for the last few weeks, rising crude price was something that had been weighing on market sentiment. Crude prices had been rising because of the conflict in the Middle East. The brief spike, which led to concerns that probably there could be further pressure on the rupee, but now those concerns are easing a bit. Remember, India is among one of the largest importers of crude oil, and rising crude oil means more outflow of foreign exchange, which means that further pressure on rupee. So that has eased for the time being, and that is giving relief to a lot of players. Also, the GIFT Nifty is implying a start around the 19,800 mark. US markets ended mixed last night. The S&P 500 eked out small gains, but overall the sentiment in global markets appears to be quite confident at this point in time. Asian markets are trading lower. Alibaba's Hong Kong shares, Alibaba, which is the Chinese e-commerce major, shares in Hong Kong have tanked about 10%. That's because the company has said that it will not proceed with the spin-off of its cloud computing arm. Now let's take a look at the foreign institutional activity. FIs have been net buyers of around 957 crore worth of shares on Thursday. Now, FI selling has been also one of the reasons why probably you've been seeing pressure on the frontline indices. It's too early to say whether there is a turnaround in FI sentiment at this point in time, but there seems to be some signs that the selling pressure may be easing a bit. Domestic institutional investors, on the other hand, net bought about 705 rupees worth of stocks on November 16th. But first, let's discuss the trade setup and strategies for the day along with Jay Thakkar, Head of Alternate Research, Capital Market Strategy at Sharekhan by BNP. Well, Jay, welcome to the show. Good to have you here with us.
Hi, very good morning to you, Santosh, and thanks for having me.
So, Jay, tell us, how are you looking at the market at this point? We've seen a very strong rally so far this week. Sentiment also remains positive. So, what are the cues that you're picking up?
Well, yeah, Santosh, we have seen a very good bounce back coming in the indices. But then, yesterday, what happened in the last 45 to 30 minutes, the kind of sell-off which we saw from the higher levels, post-market, we got that news that the RBI has in fact increased the reserve ratio for the personal loan and many other kind of credit instruments, and because of which I think there was a sell-off clearly, which post news we have come to know, and that has definitely created a negative sentiment in the short term, and hence we are seeing Nifty likely to open down by 90 points, or maybe likely to open down by 500 points. So that is something which happened. The kind of sell-off which we saw, I think it was because of that only. Definitely someone will be knowing about it. So this is what happened, and I think with that, the short-term trend or short-term this up move seems to have taken a pause now. So now until yesterday's highs are not taken off, the markets are likely to trade with a negative bias. Now bank it doesn't close above 44,000, 44,200. We can see 43,500, maybe 43,000, or maybe even lower levels. And as far as Nifty is concerned, 19,800, 850 now would act as a very crucial resistance until those levels are taken off. We can see Nifty in fact testing the levels of 19,500 as well.
Well, a quick question here, Jay. Now, we've been seeing some kind of a two-tiered market here. The frontline indices like the Nifty and Sensex have been under pressure for some time. But at the same time, you're seeing frenzied buying in small and mid-cap stocks. Now, you did mention that sentiment has turned slightly negative. But is that, when you say that, do you mean here the large-cap stocks, or does it apply across the market?
I think this applies mainly to the banking and financial stocks, and those stocks which would be impacted by this kind of change in the RBI policy. I think those all stocks are likely to see some selling pressure.
Well, Jay, I'll just get back to you. In the meantime, the markets have opened. The Nifty has opened on a bearish note. Nifty right now at 19,710. That's a drop of about 55 points over the previous close. Now, this was expected to some extent given the late sell-off that we saw on Thursday afternoon. So, Jay, as far as the financial stocks go, how would you approach them, or what would your advice to investors be at this point? The Nifty Bank right now down by about 407 points at 43,745.
My point is very clear, Santosh, that till Bank Nifty doesn't close above 44,000, it's a sell on rise. So even if you see a bounce in today's trading session, it should be utilized as a selling opportunity until we see a close above 44,000. A close above 44,000 will definitely negate this downtrend. It would lead to some bounce back again till the levels of 44,500, and maybe thereafter we can understand that markets have digested this news. But till that doesn't happen, there is a risk of a downside.
Well, Jay, tell us something about your view on individual stocks. So, for instance, how would you look at SBI and ICICI Bank?
Well, SBI and ICICI both are likely to correct in the short term, mainly because of this news. Is what I'm seeing on the charts. If you see that ICICI has failed to bounce back quite a lot, despite markets having bounced back, Santosh. And if you see ICICI Bank, then it has broken down the short-term trading range on the downside now till 950 levels aren't taken off. ICICI Bank will just correct until the levels of 912. And as far as SBI is concerned, a huge gap down today is what we have seen. It can attempt to fill this gap until 580, but overall trend will be positive only about 590 levels.
And what about PSU banks, Jay? Because they've also been seeing a lot of activity. How would you approach the PSU bank space?
Absolutely, PSU has been outperforming. PSU banking bank is outperforming the private sector banks. But then this rally seems to be a three-way rising structure in the PSU bank. So on the lower side, if you see PSU Bank Nifty index 4,900 is where Santosh the crucial support lies. If 4,900 levels are held, you can see it bouncing back to 54, 5,500 again. But if 4,900 levels are broken going forward, Santosh, it will fall to the levels of 4,600 as well.
Okay, Jay, and before I get back to you, let's have a quick look at the key gainers and losers in early trade at this point in time. So among the big gainers at this point are BPCL, which is up by close to about 1% Asian Paints and M&M are also the gainers in early trade. Coal India, Divi's Lab and Maruti Suzuki also on the gainers list. All the stocks trading in grain along with Bajaj Auto, JSW Steel and Eicher Motors. And among the prominent losers of the day in early trade, we have SBI, which is down by close to about 1%. Well, Jay, besides the financial sector, which are the other stocks that are on your radar today?
Well, I think, Santosh, that's the overall in this market, the stocks which one can look at from the short-term point of view is, the oil marketing companies, OMCs, which are really in an uptrend. I mean, you see the kind of rally which has come in OMCs, I mean, in Petro, BPCA, all of those companies, and crude is continuously falling. So these companies can see definitely some uptrend in the near term. Oil marketing companies in Petro has broken out from a very crucial resistance. It can reach to the levels of 350 on the upside. BPCL too has provided a very breakout from a very crucial resistance, so it can reach towards the level of 440 on the upside. I think the paint companies are likely to do good, Santosh, because they are also the likely beneficiaries from the falling the crude oil prices, and Asian Paints has provided a breakout today, so it is likely to reach towards the levels of say 3,200, 3,300 immediately, and thereafter maybe even 3,500 going forward, and now 3,100 on Asian Paints is a very crucial support level out there. Few of the I would say hospital and pathology lab, I would say sort of companies like Metropolis or maybe Lalpath Lab or Apollo Hospitals. These are seeing some good buying interest, and Metropolis is likely to reach towards the levels of 1,800. So these are the few stocks which are likely to bounce back, and definitely mid-cap IT is doing good. Large cap IT is seeing some good bounce back in yesterday's session. but mid-cap IT is really the space to be in. So I would say that some part of those companies which are benefiting out of crude oil prices, the falling crude oil prices, I mean, those are likely to see some good upside, and along with a few of the laboratory or maybe hospital stocks.
Well, Jay, thank you so much for joining us and sharing your insights with our viewers. And well, with that, let's quickly take a quick look at some of the stocks that could see some action today. There's Delhivery, JSW Steel, and TVS Motors. Now, Delhivery, the reports that SoftBank is planning to sell stake of about $150 million through a block deal today. This accounts to about 4% of the company's equity base. Kotak Mahindra Capital is said to be the advisor on the block deal. TVS Motor Company has announced its entry into Europe by signing an agreement for import and distribution with Emil Frey, the automobile importer and retailer in Europe. This signifies a significant step towards global expansion. JSW Steel has withdrawn its application for the final mine closure plan of Jajang Iron Ore Block, Odisha. The company has submitted an application for the final mine closure plan before the Indian Bureau of Mines on September 1st, 2023. And now let's navigate our discussion towards the fundamental side of the story and take this forward. We are being joined by Sandip Agarwal, Fund Manager at Sowilo Investment Managers. Well, Sandip, thanks for joining us and good morning.
Yeah, good morning, Prashant. Thank you so much.
So, Sandip, how are you approaching the market at this point?
So see, we are very long-term investors and we take very long-term bets. So we have clearly, these 2-3 themes around. We believe that India growth story and particularly the manufacturing side will do extremely well going forward as well, because, all this China plus one and the PLIs and also, the domestic demand, all this augurs extremely well for the manufacturing side. The environment is very conducive. The whole world is facing shortage of skilled labor, and Indian demography supports the environment. So I believe that we for next 4-5 years or maybe slightly more than that, we are going to see a very good growth, and the growth will be disproportionately led by the manufacturing theme. So we play that theme on one side, and the other side, the more another interesting theme which we have been playing in our fund since inception has been the increase in per capita income. So we target the apparels, the footwears, and the paints and the adhesives and all those. And we generally don't go for the leader because leaders are very, very expensive. They are well-run companies, and there you only can make return to the extent of the profit growth maybe. And so we go for the second or the third player which are reasonably fairly valued, and they will catch up with the same story because India has its very high own consumption story. So we believe that the second best player also will do well, and the gap of valuation will narrow down in a systematic way. So we will make money from the growth plus valuation discount which happens with the leader. So that is the way we have been positioning our portfolio since inception.
Well, Sandeep, could you talk to us about some of the second and third tier names that you mentioned in your portfolio?
So, because we have our own PMS, so it is very hard to call out names, but I will give you an example hypothetically, which may not be in our holding or maybe in our holding. For example, we will not chase Pidilite because it is extremely well-discovered story, a mature story. So we will find out, some derivatives, some other second names in that same space. Similarly, we will probably not chase Titan because, again, it is a well-discovered and very good quality company, very high growth and all that. We will probably look at some of the other names in that space, maybe, like Kalyan or Senco and those kind of names. But, that is the way we look at the spaces, different spaces. Similarly, in food space and apparel space, we will not go for the leaders, we will go for some other names. So that is the way we position our fund.
Sandeep, what's your take on inflation? Do you see that hurting consumption at some point?
See, yeah, while it is not showing up right now, but I think, we are going through a very interesting times where, inflation is has started hitting demand in the mid segment and the lower segment. but it has almost no impact on the affluent segment and the luxury segment, and that is the reason you would not see any big pressure or any pressure in let's say the expensive two-wheelers of, let's say, kinds of Eicher, but you may see some pressure on the Hero side. Similarly, it is across all the segments we are seeing same trend that the affluent and luxury segment is not seeing any pressure, but the mid and small segment is seeing pressure, which suggests that inflation is hitting some segments. And in my view, inflation always shows up with a lag effect, so we are yet to see some more impact in my view. But let me put it this way, that generally the central banks are forward looking, and our central bank has done an exceptional job in aiding growth along with proper controls. So I think that maybe we may see a little bit of inflationary number here and there for 1 or 2 more quarters, but things should be under control. We will not see very bad numbers on the inflation side also because of 2 reasons. One, as you rightly mentioned some time back, that crude is also cooling off, which is one of key source. And secondly, even with the season food side also, we will see some relaxation from the vegetable side because the seasons are coming now. So I think that we will not see very bad spots in inflation number, but there could be some here and there. But with crude cooling off, we will see some solace there as well.
Well, one last question before we let you go, Sandeep. Now, there's also the issue of valuations, right? Because even if you were to look at some of the second and third tier names, overall valuations have gone up quite a bit across the board. So how much of a concern is that for you?
The valuation definitely is a concern, but we see it in a different perspective as well. For example, if you see the kind of money which has been pulled out from Indian market in last 1.5 to 2 years by the FIIs, that is insane. So if now if you go by all the credible institutional reports, we see that India will be one of the fastest growing economy, and there's expected political stability and this China plus one, all things coming together. What will be the option for the investors? They have very few options in the world. There is some spaces there is geopolitical uncertainty, some places there is war kind of situation. So the investable arena is very limited. So I would say that India is one market where you can get all the comfort on the external factors and the internal factors. So obviously, when you get that comfort, you have to buy a little expensive. And remember that this second tier, third tier companies have the biggest advantage of under penetration. They are very less penetrated. So I will not say that these stocks can't correct. They can correct on a bad day. They can correct if there are some concerns. But if you're taking a 5-10 year call, then I think they will do extremely well. So you have to buy them, either on a bad day, but I have not seen that people have made great success by just timing the market. You should buy good stories, good stocks, and you should basically good businesses, and you should hold on to them for longer.
Well, thank you for all those insights, Sandeep. And well, that's all that we have from our team here at Moneycontrol. So have a great day ahead. And with that, it's a wrap on this edition of Opening Bell.